morning. Just taking a poll, how many in the room are investors in education companies? I see 1, 2, 3. How many are entrepreneurs, startup? That's a lot more. So my partner Josh and I, we're investment bankers, we're based in New York. My partner and I have been covering the education space for over 20 years. And so we've seen, the ups and downs of the sectors when it was called e-learning, I-learning, M-learning, and so on and so forth. And now it's called EdTech. But the reality is EdTech is just a modality of a much broader sector, which is education, which is really anything that touches skills acquisition, identification and acquisition, which is in the US the second largest sector in the GDP. And as we've been banking the sector, we've often heard from non-education investors that the sector was too small, that we couldn't make money in it, that there are no exits, brief that it was not an investable sector. And so as we've seen what's happening over the last 2 years, we're asking ourselves, is this really EdTech? And I'll show you a couple of slides. So you can't make money in EdTech. So this is a graph of the stock price of a couple of education companies for the last year and a half. The NASDAQ grew by 37%, which is not a bad growth if you're thinking about a year and a half of return. But you've got companies that more than doubled. Tal at 250%, Chegg is 281%, 2U at 220. So you're more than doubling your money. So I think you can make money in education in the public markets. How about the sector is too small? This is a sample, and as I was looking at it, I'm sure I forgot a few of them, of company that took investments over the last year and a half. And you can see the amounts are more than just seed funding. So there's a way for large funds that have said we can invest, it's too small, to deploy capital, and some of those companies are doing really well already. The other thing is, being faced with what's happened over the last 2 years, they've said, this is just an accident. This is gonna, the sort of bubble that you see is gonna go down. And based on what we've seen so far in the last 5 months of 2018, and we can debate what the projections are, but just on the run rate, we're seeing that we're probably gonna have a really good year, both on the investment and the M&A activity. There were a couple of billion-dollar transactions already, the first for 5 months of this year. So big, you can make money and it's investable. Okay, so as a result, you've got a lot of conferences where you've normally, over the last few years, you had conferences with just educators, and there's been a new ecosystem in Asia, in the US, in Israel, in Europe, of those conferences, and now you start seeing attendees that you would have seen 2 to 3 years ago, investors, public equity investors, private equity investors that were generalists. Over the last 2 to 3 years, we've seen a lot of activity in the US, and it's supported by a couple of things. There's a really deep and broad ecosystem of investors. This hasn't happened overnight, of course, but you've got all over the country funds that have either dedicated their portfolio to investing in education or have education as a core competency. What's interesting is if you had drawn that map 2 years ago, probably, 20% of those names would have been on it. Exceed Capital was formed a couple months ago and already have 3 investments, including Trilogy. So that's the deep and broad ecosystem. And then within that ecosystem, you've got funds that take the whole spectrum, go from early, not quite early stage, but pretty early to large cap, with some that are, really good success stories. And so with that, this is what happened in the US over the last, call it 2 years, just in K-12. And the sort of the roadmap is often the same. You've got an investor that is thesis-driven. They're not driven by a target. They look at the sector and say, it's fragmented, it's not very well run, we just need to find a platform. And they find a platform. Often those investors are not education investors. Premier, Hellman Freeman, Francisco Partners, inside, maybe less, they have a bit of a track record, but Tomo Bravo, who we don't think as education investors, they're software investors, they're media, business services investors. They identify a platform, and then they proceed to roll up a bunch of smaller companies, and then they exit it. And so that's just in a matter of 2 years. And this is Francisco Partners was not in education, call it 2 years ago, and now they're about to close on Renaissance. They bought Mayon and Discovery Education. So I want to highlight a couple of transactions that happened over the last few months, just to sort of support a couple of trends that we're seeing. The first one, it talks about, we've discussed talent management, human capital management being part of education, and that's very relevant. You've got Adecco, which is the largest temporary company in the world. It's got about $28 billion of revenue, $1.4 billion of EBITDA, and $11 billion of market cap. They're the big gorilla here, and they work with agencies, but also they embed themselves with their clients, providing temporary work solutions where they need it. And they've realized, along with their competitors, that you're no longer in the brokering of labor. You're no longer buying workers and then reselling them at a premium. If you want to be successful, you got to take the talent you have and upscale it. And so about a month and a half ago, they acquired General Assembly, which is the sort of the grandfather of the bootcamp category. It's based in New York. That's about an 8-year-old company. It had raised about $120 million and generated about $100 million of revenue. And they bought that for more than $400 million, more than 4 times revenue, which is a lot more than what they're trading for. But for them, they see this as essential to their growth, their ability to serve their clients by providing the talent they need and not the talent they have already in the pool. They see we've discussed that yesterday, sort of the workers imbalance where the supply is going to be very, very unmatched the demand in the next 10 years, both in the US, in Europe, and in China. And this is strategic for them. The second transaction that I wanted to highlight was along the same line of reskilling and upskilling is Trilogy. And this is a capital raise. This is a company that's about 3 years old that took the OPM model, which is, if you're familiar with it, the online program management, partnering with the universities to put their programs online. They took that category, but also focused on the bootcamp technical skills, instead of the more academic skills. And they raised $30 million last year in June, and about maybe a week or 2 weeks ago, they raised another $50 million. And so that's a Series B, they're $50 million, that's getting pretty big. The value proposition for them is not to work against the system and tell the universities you're no longer relevant to the system, is to say, we know you exist, we know you actually, students trust you, trust your degrees, we're going to work with you to provide a new kind of education that you're not set up to provide, and we'll do that well, we'll be your partners, we'll share revenue for that. What's interesting there is they brought in investors, some of them that were education investors, others that were new funds or not known as education investors, like Highland, Macquarie or Exceed. The last transaction is a bit of a different take, and it's on the K-12 take. You've got NetDragon, who is a Chinese company who's very well known for online gaming. They identified a couple of years ago their education as a focus, and partly realizing that online gaming may not stay forever. And so in 2015, they acquired a company called Promethean, which was the world leader in whiteboards, in hardware in the classroom. And so thinking of the classroom as being the center of what's happening in education. It's about a billion company now, the whole company. But they acquired, they paid $130 million for this. And they've made another acquisition in the meantime. But they've been thinking all along, how do I establish a footprint in the classroom? And then they looked at Edmodo, which is the sort of the pioneer in social collaboration in the classroom. When trying to remember the name of Index, I think invested in Edmodo. They called it the Facebook meets LinkedIn meets education. And so they said, we're investing, we'll figure out what the business model is later. They raised about $78 million. They have 90 million registered users around the world, but they make no money and they lose about $20 million a year. Yet they were acquired by Edmodo for $137 million, most of it in NetDragon stock. But you can see how NetDragon is thinking about, this is the teacher relationship that I'm acquiring. And with the whiteboards, with other things I'm going to do, I'm going to touch the gatekeepers. It took the publishers and the large education providers years and billions of dollars to have that kind of access. And they bought this for about $200 million. And so there are companies that are changing the way you sort of deliver the service, and they're doing it in a more pretty capital efficient way. I know I have a 1-minute warning. I'm going to go quickly through that, and come to see me if you want, but just to show that education is a global market. I'm not going to read through this, but there's about a list of 10 to 15 transactions and 10 to 15 acquirers where either the acquirer is American or the target. Cross-border transactions, so whether they go from the US to India, China to the US and the UK, US to Canada, Australia, or Brazil. And so it used to be a myth that education was very domestic, but we can't say it's no longer the case. Thank you.